Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 15th of January, Wednesday. Well, we have witnessed surprisingly robust earnings from major US banks, including Citigroup, Goldman Sachs, JP Morgan, and Wells Fargo. These are stellar earnings from the banks. Once again, all of them exceeding expectations in their Q4 earnings, showing a really healthy financial sector, with Citigroup even announcing a substantial 20 billion stock buyback. This is definitely a confidence booster for investors, and also we have the core CPI coming in lower than expected. This is red because it's lower than the previous one, slightly by 0.1 in both the core CPI year over year and month over month, which indicates a slight easing on inflation. But everything is not good. That's why I have the sentiment analysis in 45, because we got basically the New York Fed manufacturing index plummeting from 3 to minus 12, signaling a really big contraction in manufacturing activity. Then we have the other parts of the CPI on the headline inflation causing from 0.3 to 0.4 and from 2.7 to 2.9. This is negative because it indicates that there are still persistent inflationary pressures. So everything is mixed right now, but slightly positive in the price action. As we can see, the sentiment analysis is basically neutral, but we've seen a lot of good indicators. The first thing that I would like to show you is how the market internals shaped the market yesterday, with advanced decliners and volume in both the ES and the Nasdaq really holding positive. And then today, since basically overnight, we've been seeing a slowly increase in volume and also in activity. So we got that as a signal, and since I've been watching the overnight, I've been seeing this holding pattern. And after yesterday's big push into the close, I was just waiting for an opportunity on the 15-minute chart to really have some levels. As always, my setup is a pair of an inverse fair value gap, in this case the 15-minute, and a bullish fair value gap. In the zone in the middle, we have also a 1-minute holding pattern, which I was really watching. This was above the order block from late into the close. We have this bullish fair value gap, and look at this beautiful setup, because inside the 15-minute in this zone we got the push and pullback on the consequent encroachment, and again an inverse fair value gap with the consequent encroachment being held up. Then I decided to jump in with a really tight stop. In this case, I think it was 20 something, 25 points of risk. Remember that this year I'm trying to increase from 15 to 25, giving me a little bit more room to play on the setups. Only one contract, and my target was the first low-hanging fruit, yesterday's push. But look at this pattern here. This pattern here right before the CPI number, this is bullish. So then I decided to go all in. I put my stop at break even because I was basically risking, in this case, it was like 75 points, around $1,500. That was all or nothing. My stop was at zero risk, but I was willing to accept the price action telling me, okay, I think this can be a big winner. And for you to have big winners, you have to risk sometimes and realize profits. And that's what I did. I was just trying to hold for this long hanging fruits. In this case, all this liquidity here at 21,180, I put a stop order, sell there on the buy side liquidity, and I got 240 points more or less. That was like almost $6,000 in this trade, the biggest trade of the year yet. And I'm super happy. And I never look back. It's true that the price action is super bullish. We are seeing correlation in other parts of the market. We are seeing all the Nasdaq, all the Magnificent Seven, Google 3%, Nvidia 2%, Meta 4%. We are seeing semiconductors with Micron Technologies 6%, we are seeing Tesla 6%, all the banks with the earnings really crashing in green. 1.80 JP Morgan, Wells Fargo 7%, Citigroup 7%. All these are correlations, are good correlations of a good trending day. Small caps 1.90. And then we have inverse correlations. In this case, the dollar is showing you pressure. Pressure means growth for the other parts. We are seeing yields being destroyed because now the market is pricing in a little bit more cuts. In this case, I have the yields here. This is January, this is March, May, June, July. As you can see, all are in the red, and we are from 4.3 to 4.1. It's not yet a full 25 basis points cut, but I'm seeing progress. Yields are pulling back, treasuries are pushing. So we are seeing the market really saying, we like this data, and we are seeing growth. So that's all for today. I wanted to just give you my sentiment, my analysis to really confirm. And if you have unrealized profits right now, if you are long, take those profits and never look back. These days are a big congratulations for the bulls. So don't be greedy and just take those gains. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, and remember that I do these videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Discipline, patience, and risk management are key for your success in this industry. Stay safe, everyone, and see you tomorrow.